Hey everybody, this is Sam Kwok here, one of the Kwok brothers, and meet my 10-month-old daughter, Rebecca, and I plan on paying her $12,000, and she doesn't know it yet. Now, you might be thinking, Sam, are you out of your mind? Why are you paying your daughter $12,000? Well, that's the question that I'm going to answer for you guys today. Now, as a business owner, there are numerous items I can claim as a tax write-off. These are things that I can spend money on that can be deducted from my taxable income. Now, these are typical expenses such as my phone service, office rent, certain business meals, and the absorbent amount of money I spent to get you guys to smash the like button on this video. So how this works is that if my business made, let's say, $1 million this year, I can claim a certain amount as business expenses. Now, for the sake of this example, let's say I spent $750,000 as business expenses, leaving $250,000 as profit. Now, the best part is that the business expenses could also include parts or all of my cell phone bill, mileage on my car, buying new computers, and even some of my travels. Now, according to the current tax system, I only have to pay taxes on the $250,000 profit, not the $1 million gross income. In contrast, if you're an employee, your taxes are already paid as part of your paycheck.
This is your lunch, but here I come, the government, and I get to take 40% of your lunch.
But for business owners or self-employed individuals, we first earn our money, spend it, and then pay taxes on whatever left over. Now, you're thinking, where are you going with this, Sam? I mean, how does this all relate to paying your daughter $12,000? Now, guys, I promise there's a point to all this, so hear me out. Now, part of my business expense also includes my awesome employees. So any amount I pay my employee can also be deducted from my taxable income as payroll. But little do people know that I can also pay my family members legally if they have legitimately performed a service to my business. So that means I can pay my baby Rebecca for services that she provides for my business. But you're saying, well, hold on, she's not even 1 year old. What the heck is she gonna do for your business? Like, I don't know, take out the trash? Well, I'm glad you asked. You see, it turns out that I needed a baby model for my marketing materials as well as, she costs a lot of money for YouTube video appearances. So her image is on our postcards, flyers, and promotional items. So yes, I'm paying baby Rebecca money to reduce my taxable income and thus paying fewer taxes. Now, you're saying, hold on, Sam. Are you sure this is legal? I mean, are we going to see you in cuffs and chains next year? Well, to verify this for you guys, here's Steve, my tax professional.
Hey everybody, Stephen Hamilton here. I just want to talk to you guys about hiring your kids to work for you. I have to be honest, this is a great tax strategy that we can utilize. Typically, our kids are going to be in a much lower tax bracket than we are. So one thing you can often do for either your rental property or your sole proprietorship is you can actually hire them, pay them, and you can deduct that in full. What would happen is we would issue them a W-2. They would not be subject to Social Security and Medicare on those wages as long as they're under the age of 18. And then from there, what would happen is we would end up getting a nice, lovely tax deduction. They would then report that income on their tax return. The current exemption, they're looking at about $12,600. That's not taxable to the Fed. And then you may have some potential small state taxes. But this is a great way for them to fund a Roth IRA at a 0% tax rate, and you get the deduction. So little Johnny can buy his own sneakers going forward with his paycheck. Now, in order to do such, you have to make sure that they are actually doing work. We can't just say that they're earning an income. They actually have to be able to document that they are doing work. I recommend utilizing time cards, making sure that they're tasks that are age appropriate. You're obviously not going to have your 3-year-old mowing lawns. But at 10, 12, it's quite possible that they might be helping out with that kind of work, or even potentially painting. Now, some other ways that we can utilize this benefit is maybe we pay a licensing fee for the use of our child's image in some advertising. That's a great way for us to get a tax deduction as well as pass some income over to our children.
Well, thank you so much, Steve, for that awesome breakdown from a professional opinion. Of course, if you guys want to contact Steve, and if you guys need some tax help or maybe some accounting help, his contact information is down below in the video description. He's the man I trust with my taxes as well as my accounting. But I also want to give you my perspective as far as what I'm doing with Steve's advice. So Here it is. Now, there's a very specific way of paying family members when legitimately doing so. First, you have to have a business, of course. Your business can be a sole proprietor, which is, just you, or other entities like an LLC, LLP, which is limited liability partnership, or even a corporation. Depending on the entity, the payment structure varies. Second, your family members must have worked for the business. You can't just pay them for the sake of saving money on taxes, and that would be illegal. They have to work, and yes, you have to move the money to their bank account to make it all legit. So you're asking, why $12,000? Why not a bigger number? Why not pay her $1 million? Well, I'm glad you asked. According to the IRS, the current standard deduction for individual is $12,000, meaning you can claim $12,000 as, well, standard deduction. To break it down even further, everyone filing taxes have their gross income reduced by $12,000 when calculating their taxable income. So for baby Rebecca, I can pay her $12,000. She doesn't have to file taxes until she turns 18. And the entire $12,000 is tax-free for her.
So Rebecca, what are you planning on doing with $12,000? Tell us your secrets. You gonna spend it on toys, formula, cookies? Tell us. Speechless, I see. Alrighty, I respect that. I respect that you want to keep all of your secrets to yourself. That is the key to success. I get it.
Now, technically, I can pay her more than $12,000 and have any excess income be contributed to a tax-deductible retirement plan. Not only does this help her get ahead in starting her investing, but it also saves money on taxes. On top of contributing to a tax-deferred retirement plan, I can also set up what's called an HSA, which is a health savings account. Now, with an HSA, this is also a tax-deferred account where she can contribute up to $5,000 each year, and all $5,000 can be deducted from her taxable income. Now, commonly, HSAs are very much used for things like medical expenses, dental, braces, and I can pretty much tell that Rebecca probably will get braces later down in the year, and you guys know how much expensive braces are. So what that ultimately means is that she can contribute $5,000 into her HSA, grow it tax-free by investing in stocks, bonds, and mutual funds, and all of her growth and money inside of her HSA is going to pay for her medical bills and future doctor visits, prescription medicines, as well as certain items that may also qualify under a qualified expense under the HSA plan. So not only like what Steve inferred earlier about Johnny paying for his own sneakers, Rebecca can now pay for her own shoes, pay for her own clothes, but she now has an HSA that is growing tax-free and pays for all of her future medical bills. Now, what I plan on doing with Rebecca's HSA is investing in real estate using HSA. And yes, you can also self-direct an HSA, which you can take the funds in an HSA and invest in something like real estate, commodities, and even Bitcoin. You can invest in Bitcoin using HSA. So think about that for a second. Investing in Bitcoin and then the Bitcoin growing, and of course selling that Bitcoin and then using that to pay for Rebecca's, medical bills and braces. That's an interesting idea. So yeah, you can also contribute into an HSA, IRA, or other tax-deferred retirement vehicles to help Rebecca get a head start. Now, here's the magic question. Can you do this with your family members? Yes. If you have a business, it's legitimate, it's possible. And it has to be a real business making real money. You can't just obviously say that you have a business and not make any money. So guys, if you're not a business owner, I hope that this really inspires you to start a business. You can start something little as a side hustle, selling items on eBay, or making YouTube videos like me. So you can tell I'm a big fan of entrepreneurship if you can't tell by now. And just another reminder for you guys to make sure you consult with your tax professional before you try anything. Cool? Okay, before you go, make sure you subscribe to our channel and smash the like button and check out some of the other videos that you might be interested in. Thanks for watching, guys.